What's happening, guys, and welcome back to another Sunday Scan. I hope that you all had a great week, great weekend, and now we're all getting ready for the week ahead. A lot of market volatility out there, and we're going to talk about why that is, and then review some charts, and then later on, we're going to bring Stan on, and he's going to go over his main watches for the week, and we'll go over some other market concepts as well. So before we get into all that, though, Traders for a Cause is coming up pretty soon. It's in October, and Investors Underground wants to help a couple of traders to be able to attend that event by sponsoring their ticket for the event. And so what we're looking for is, a couple of traders who are doing everything that they should be along their journey. They're putting in the work, and they might just need a little bit of a nudge or a hand to be able to attend the conference. And so in order to be eligible for this possibility, what we're looking for is for people to leave a comment in the comment section and basically just describe, yourself as a trader. What has your trading journey been? And what would going to Traders for a Cause really mean to you? And how would you be able to take advantage of that opportunity? And so you can either leave a comment in the comment section, or if you're not comfortable with that, you can email me directly at chris@investorsunderground.com and, kind of share some of those details. And then we will pick over the next couple of weeks, a couple of people to cover their ticket. So as long as people are able to cover their own airfare and their own accommodations, IU wants to help just kind of make that decision of attending Traders for a Cause a bit easier for them by covering their tickets, which can be fairly expensive, especially for developing traders or people who are still on their journey. And so leave a comment describing those things, or you can email me directly. And over the next week or two, we will pick a couple of, participants to be able to take advantage of that. So let's get right into some of the market stuff. So another volatile week in SPY, SPX, the NASDAQ, and I think there's really a couple of driving factors behind it. If you remember from last month, we had the big Japanese event where the currency markets and the big tech unwind caused this, huge flush down here. And then we had a fairly straight up rebound since then. And so it was like the VIX blew out, you had all these things panicking, markets flushed, and then all of those, factors kind of reversed on a dime and the market went straight up. But now what you're starting to see is some of the factors that caused that initial sell-off are coming back. And so some of the things with the Japanese currency things, again, we'll go over this very quickly, but I'll pull up some of those charts and you can just kind of see that the factors that were causing the sell-off last month are starting to trickle back. And I think that's really what you're seeing in the markets. And maybe, it's not a full-fledged, slam down like it was before, but I think that those things are definitely impacting it. So NVIDIA is a great example of one of those things. So, I can kind of see the AI trade starting to unwind a bit. And I think a lot of people can see that, NVIDIA is still the market leader and that's struggling. And all like the secondary names are, struggling much more than NVIDIA is. So, after its earnings report, and they reported good earnings and everything like that, but I think it's really just in a revaluation stage or a different part of the cycle. The first part of the cycle, is all the fundamentals, the sales, the earnings growth, and, the market share. But then you kind of get to another point in the cycle where those things are known and they're not as surprising. And, now it can't grow quite as fast. And so you're just going to have some variance or some volatility along that way. Even if the overall trend, stays in place over the next couple of years, you can still have periods where, you can really get a revaluation or a big mean reversion along the way. So NVIDIA was a great example. Since earnings, they've really had a pullback and they've struggled to hold, most levels. And we're coming up to that $100 level now. It's a big psychological point. And I think that there's a good chance that we might bounce off of it. And then if we stay heavy on that bounce, then I think we're going to retest, possibly these lows and kind of consolidate around here. So we'll get into that in the main watches later on, but NVIDIA is definitely a big driver of some of this market volatility, along with the rest of the AI names. You had things like AVGO, LRCX, ASML, SMCI. You have all these names that are related to the AI theme or the semiconductors or, that kind of sector. And a lot of them are just unwinding. And so that's one aspect of why the market is correcting. And then I'll just very briefly go over this. So this was the big currency flush between the US and the Japanese yen that caused that panic last month. And it was basically their central bank was saying that they're going to raise rates. Our central bank is saying we're going to lower rates, and that causes a big shift in the currency markets. And then, after the big panic and the Japanese markets crashed, the Japanese central bank said, okay, well, we'll only raise rates and do that if we can do it without disturbing the markets. And we rallied back, and everything rallied back. And then they were like, okay, now that the market is stable, we're going to try this again and basically say we're going to continue on the path of trying to raise rates and do all that stuff. And so it's just been a steady, secondary unwind. And so we're coming up to some very important levels in the currency markets. And the only reason why that matters to US investors or traders is because if we get below, some of these key levels, I think that you're going to see a snap down in the Japanese market again. And I think that that is part of the reason why we have the current pressure and selling pressure in the U.S. markets too. So that's just something to be aware of. Not that you have to be a currency trader or a macro trader or anything like that. These are just things that if they impact the U.S. market, you should be aware of them. So that way you can at least know some of the driving factors behind the volatility. And then this is the Japanese market. This is what we saw last month. And then it had that straight up correction. And then the central bank in Japan was like, okay, we're going to give this another shot. And now you're seeing that retrace. And so, on our main watches, I'll actually have a Japanese ETF that could be a way to express a trade like this if the Japanese market slammed down. But until then, we'll just leave it at that. And then the final thing is that the VIX, last month we had this big blowout of the VIX, and you can kind of ignore some of these prints up here. Those were small. That was not like the main part of the move. But you had a big VIX spike, and that's just a measure of, implied volatility or future volatility in the near term. And we started to see over the last, week or two that VIX, started to perk back up again, and it's starting to stay there. And so what that means is that, as long as there's uncertainties, and whether that's with the currency markets or macro conditions or a tech unwind, or it could be with elections or the Fed, coming up, there's a lot of reasons why there could be some expected volatility in the market. And this is just a good measure of that. If the VIX is spiking and it's holding, even though it should be kind of melting back down, then there could be some volatility ahead. So I keep the VIX on watch, especially during times like this. And they usually have, somewhat of an inverse correlation. It's not exactly what you might think it is. The VIX measured, forward expected volatility. So if people are expecting a lot of volatility, then the VIX will stay bid. And if nothing happens and the markets get boring, and then, it'll start to settle back down and unwind. But until then, it's definitely on watch. A couple of charts from the week. We had DLTR, and this was one that we talked about on Scan last week as a main watch. And kind of the thesis was we had recently seen Dollar General report, and they had some big issues in their earnings report with their demand and some other things as well. And so kind of using this as a comparable, this is what I was using to basically say that Dollar Tree had a good chance that when they reported earnings, they could have a similar type of gap down. And so that ended up playing out. And I actually did an educational video on this in IU. It's only for IU members, but it explains, in depth how to use these closely correlated kind of stocks to gauge one another and to use it as a guide when you have a thesis or a bias about a stock, and how to really use that to, make some money off of it. So that was a great setup or a great watch from last week that ended up playing out. Now we had a couple of small cap movers. I'm not going to go over a ton of charts because Stan is going to go over a lot later on, but this APLD, this was one where they had a consortium of investors, infuse some money into the business, and NVIDIA was reportedly one of them. And so this kind of falls into the category of like SOUN or some of these other names that, they had an NVIDIA headline along with it. They have options on them. They stay around for a little bit longer than you think, and then they eventually, tend to unwind. But you had a big spike up there, and then it's kind of consolidating, and we'll see if it has a secondary move. Or if it just kind of stalls around here. But that was a name that was in play from the last week. And again, always just check out the volume on some of these. If you're getting over 100 million volume on a name, these are the ones that can be potential liquidity traps later on. They can be, they're just names that are in play, and they tend to have a secondary move, in the future. But, if it starts to just peak out and then fade, that's one thing. But usually the names with options, they stick around a little bit longer. Tesla, wanted to quickly go over this one. So this is kind of like a good example of what I look for in like some of my style. is, these names that trend really well. They have relative strength during a week, and then they kind of get to an inflection point, and this was on a Friday, and then they have that mean reversion trade. And so these are the kinds of names that I really enjoy, looking for during the week, because even when the market's volatile, I still look for things with relative strength in case we get a bounce or anything like that. And so a name like Tesla, where it's strong during the week, it had some positive headlines, it runs up, gets a little bit overextended, and then it mean reverts on Friday. And so that was just a great example of how you can play the upside and the downside on some of these names. And for names that are very options driven, that's where you get those, Thursday, Friday unwinds if the calls are going crazy all week, and then it starts to kind of slip, and then they unload those calls, unload the hedges with them, and it causes a strong flush. So this is definitely a good chart to study in depth if you're interested in learning about that kind of strategy where you're looking for relative strength on a name until it gets to an inflection point, and then it has a mean reversion and it has relative weakness as that gets unwound. And then the last one, or one of the last ones I want to cover, was WHLR. This was kind of a wild one. And, Nate was warning about this on the short side a lot, and it has all the signs of one of those names that can go crazy. And I actually ended up playing this one on the long side. And so this was one of those really trappy names where, it has a big gap up in the pre-market and then it kind of fades off, but the volume isn't huge on it. And then throughout the day, it just kind of grinds and holds a lower base. And, as it's kind of dipping into that, more and more shorts are kind of getting frustrated. They're piling into it. It starts to grind up, and then you can eventually have a nice squeeze out. So I think I traded this from somewhere in the 9s up till, around 12 or somewhere around there. And it's really just looking for the signs of what's a name that is trappy, what's a name that is short crowded, and what is kind of grinding up. And then as you get towards the later part of the day, then those can be the ones that have a circuit move or a squeeze out. And it's a fairly common pattern that you see, and it can take place in all kinds of stocks. But what I usually look for is a smaller name and something with a big move up in pre-market, something that fades off and then grinds during the day, and then it creeps up towards later on in the day, and then it potentially gets to a point where, a lot of these shorts are using something like this as a risk level for it, because again, the volume wasn't huge in pre-market. So most of the shorts probably don't have an average here. Most of them are probably somewhere in here. And once it gets, past some of these points, then you can have a nice squeeze out and get a couple of dollars on that. So just a quick name I want to recap. And those were the names that I want to cover for the week. So before we bring on Stan, I will disclose that neither he nor I are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. Now let's talk to Stan. All right, we finally got Stan back on this week. Stan, welcome back. How are you?
I'm not too bad, Chris. Thank you very much. Thanks for having me again.
Of course. Of course. Yeah. A lot of volatility in the markets. I know that you've been very active. So I want to get some of your market thoughts, and then we'll get into our main watches for, what we're keeping an eye on this week and what we're, looking to trade. And I feel like at least for me, a lot of these main watches, they're ideas going into the week, but, it's not until the market actually opens that you can really lean into which area of that watch list really makes sense, because the market could have a huge gap up or a huge gap down, and that changes the way that you approach some of these things. So how are you looking at the week ahead, and how are you looking at your preparation for the market in general?
Right. I think that's I'm sort of pretty in line with your thoughts actually there, Chris, because as we saw, right, the Nvidia earnings sort of put in that local top, at least for some of the AI names and that theme there. I mean, since the earnings, we're in the low 100s, maybe going to double digits next week, right? Test some of the previous levels of interest from even before the split. So I think noticing that and being prepared, something that we always go through in Investors on the Ground is having that watch list ready, right? Having that list of names to where if and when a turn happens, right? If and when that bid is no longer there and you're looking for a short opportunity or to take advantage of the move lower, you're ready. And then you can sprinkle risk across instead of having it, concentrated into one name such as NVIDIA or SMCI. You can go through, ARM, you can do AMD, you can, right, sprinkle it across several names and then take advantage of it that way. But I think as far as the overall market, next week for me, it will be something to where I expect to see a little bit more volume come in overall. Now that we have quote unquote the summer behind us, and everyone is back from vacation, sitting behind their desks, etc. So knowing that, I'll be a little bit more cautious into latching myself at a bias, right out of the open. I think it will be important for me to see the opening print, the first 15, 20, 30 minutes, and then really make a plan from there. But as you mentioned, a lot of the action, a lot of the tone is set within that first hour. And then we go, throughout the day and experience the ups and downs, etc. So several names on watch for me for next week, and we'll see if the weakness continues overall, or if a bid shows up and if the volume comes in and here we are. Okay, we're ready to support the market to the end of the year.
Okay, perfect. Yeah, so I'll pull up your chart and then feel free to get going on your main watches.
All right, that sounds good. So the first one that I have on here is PLTR. They had, I believe it was the headline that were being added to the S&P, right, Chris? I think that kind of what set this off there in the after hours. And if you look at the daily chart, right, if you kind of have a bigger picture view, or go back a few years, pretty much since was this 2020, we've been in this lower end here, 2022 and 2023, essentially sub the $10 level, and since then we've been on a steady march. So now we're near this daily or higher time frame resistance, which we'll see if supply shows up again here into the high 30s or low 40s, etc. But for me, what I'm watching on Monday is just any sort of gap up parabolic that I can take advantage of the news, the headline. It's not, like I said, it's not anything that I'd like to fight on the front side, but if it offers a good $1.50 gap, maybe we go into the 33.50s or even clear that level out, right? Maybe 34s. We'll look to trade the fell momentum if that happens. So that's PLTR, and the next one that I have on watch is ASTS. ASTS offered great opportunities all throughout last week, pretty much. This right here on Thursday was a pretty big move from 34s all the way down to the mid 20s. So for me, essentially on the daily chart, there's still some room there that we can go lower into the low 20s or so. So ideally, we'll see if that weakness continues. But again, that's the overall bigger picture idea. So if Monday morning or Tuesday, and then there's a bid, and this thing is back over 30s and back over 32s and inching higher, then you have to respect the chart and adjust accordingly. But I will be looking for a continual fell momentum, something to maybe low 20s or even the teens, similar to how this IREN chart developed. I think obviously IREN cleared out the 14s and then sort of fell to follow through from there once it broke sub 11s. So ASTS right? Similar chart structure. You have similar audience. You have a similar bid behind it. So the difference here is we did not clear this previous top. But again, if there was a sentiment shift, if there was a shift in the tape, and this day was it, then I don't necessarily want to miss the remainder of the opportunity just because we didn't clear out an extra dollar or so. So that's the idea with ASTS. We'll continue to monitor for further weakness. And then some other names, I'll more so bunch them together: NVIDIA, AMD, SMCI, ARM. So these are more so theme moves, more so the sector moves. If I'd like to fade the market, let's say, or if I'd like to fade the AI the sector, I'd more than likely go through 2 or 3 of these names and then essentially sprinkle risk across, so it's not concentrated into any one given. But again, NVIDIA, we're hovering over pretty key levels there. Both psychological and both structural or technical, if you would, from the chart. But I wouldn't be surprised if we see it into the double digits next week, and we'll make a plan from there. But essentially, we'll continue to, if the market continues to fade, I'll continue to use these tickers as essentially my vehicles to participate. The next one that I have on watch is BOF, and switching gears a little bit more so from larger caps more to the small cap land. So BOF, it's something that I've traded in the past, like last week, I believe, actually, and right now I'm monitoring it for maybe one of those names that is just a perpetual squeezer, right? You have this positioning day, then you have a lower volume, but again higher price next day. So essentially, it's new shorts letting old shorts out, and it's just that constant higher and higher day after day on essentially lower volume. So at some point, I'll be monitoring for some sort of a blow-off move or exhaustion, maybe clear out this floor. But it's not so much driven by a price level, more so driven by behavior into how are we going to solve this volume that came in, and it still hasn't come out yet. So I'll be looking for ideally some sort of 350s, 370s trigger into some sort of a circuit 455, whatever it offers, and then once that cover comes in, then I'll be looking to trade the failed momentum. And the last couple that I have on here, and again, more so bunched together, is FFIE and LUMN. LUMN had a nice little bid there from from pretty much mid fours. Now we're inching on sixes. So for me, the 640s, these are some lines that I've had on this chart for quite some time, but the 640s obviously is a key level of interest. So any sort of gap up parabolic, any clear out of this level, I'll be interested. Higher the better type of thing. But ultimately, it's for me, LUMN is a more so bigger picture idea, more so looking at the overall chart structure and sizing in a way to where I'd like to be there as it cracks 4, as I think even that might be generous. So I think FFIE similar into the Lumen category. It's just it's a name that we've traded. It's retail crowded. Obviously, they had the reverse split, and then we had a nice push. And here we are, rejecting mid sixes multiple times already, which was pretty much that gap that it happened before there. So any sort of morning shove into previous day consolidation or previous day areas of interest. So if this shoves into sixes, I'll be interested. Or, I mean, you can kind of see how every time it just ramps up, it clears out the previous level, and then it fails to follow through. So that will be something that I will be looking for. And I believe that's pretty much it for me, Chris, on my side.
Great. Yeah. A lot of excellent watches for the upcoming week. And yeah, I appreciate you going through those. And we honestly, we have a lot of the similar names, on watch, like things like Palantir, PLTR, and things like that. They're obviously, they're going to be on watch for me into the week as well. But, we try to differentiate some of the things that we're presenting out here. But a lot of times, there's only, you know, a couple of names that are really in play throughout a week, and it might be 10 or 15 that are like excellent opportunities. And so a lot of times when we're going over watches or creating them, there's a lot of overlap with different things, which is a good sign, because it means that people are focused on things that are in play, things that have catalysts, things that are moving unusually with range, which is what you want as a trader. You want things with range, you want things with a direction or a trend or a reversal coming up. So a lot of the names that you had on watch, I will also be watching for the upcoming week. And then some of the other names that I have on watch are the first one is Apple. So Apple has their big event on Monday, and they're unveiling some of their new iPhones, some of their new products and updates. And we see this a lot where this is supposed to be one of their bigger events and potentially some substantial changes and upgrades. And I think that, making a plan for two scenarios for something like this is just the way to go about it. If they have something that's like really, groundbreaking, something that is going to attract a lot more customers, more sales, then I think that you could have a nice, ramp up, and maybe it holds or trends higher. But usually what we've seen is that, you'll get some hype into the event. And this is Apple's held up pretty well given the market, in general. But I think part of it is because they're anticipating this being a good event. So it's possible that, they're unveiling their stuff. We have a nice, ramp up spike. But then if it's not actually that groundbreaking, then, you get a fail to follow through, and it just flushes. And it's done that many times during these events. So I think plan for two scenarios. One, if you're watching the event and things look like they're actually, a new turning point in the company, they're doing very interesting things. If there's things that can be translated into earnings, sales, and new customers, then that could be, a spike and one that's held. But otherwise, if it's just kind of like, the iPhone has a new feature, it's just, kind of like the standard thing. I think you can get a spike and then a fade back down. So I would just plan for both of those scenarios. But usually the inflection point comes leading up into the event, and then like immediately following the end of the event. And so during the event, it kind of is volatile back and forth, but leading up and then right after the event, that's usually when you get like a trend change, whether that's higher or lower. So I'll be watching that. The next name that I have on watch is SMCI. And so obviously with the sector, this has been a hugely relative weak name, and it's gotten sold off and hit. It had the short report. It had, delaying a 10K. It had a whole bunch of other things while the market's pulling in. So this has been a great trender on the downside. But as you see, we're getting up to this level where, it's kind of approaching the top of the channel where that big breakout that everyone, the big episodic pivot, started in the first place. And those can be areas where you could potentially have a bounce. And so if we have, maybe gap down Monday or some weakness, but then, it starts to firm up a little bit, that could be a good spot to risk off of. If you get into that like 360 area, give or take, these names can move $5 or $10 in the course of a minute or two. So, you have to be a little bit flexible with the ranges. But usually when I'm looking for like a potential reversal trade, I'm looking for something that's been heavily sold off, something that shorts have conviction on, and something that is, increasing volume and it's going down into a prior significant area. And so, if I were riding this short from up here, 500, 600s and all the way down here, where would I be looking to really be like, okay, I've caught the meat of the move. Now, it just doesn't make sense to keep hoping for, to get to that 360 level, grind down to 350, and then all this resistance in here. So I think that we're at a point where SMCI could be around a potential bounce day. And that doesn't mean a larger trend change. It could still be, trending back down and eventually make a full round trip. But around these points, that's where my antenna goes up for a potential bounce of, it could be 50 points or something like that if the market is up, or if some of the AI names are up on a day like that. So SMCI is really on my radar. I've been kind of trending it with puts here or there on the way down on these pops along the way, but now my bias is starting to shift where I think that the reward favors a possible bounce. But if it's acting heavy, if it's not firming up, if it's not acting like, dip and rips, then that thesis is void. But it's certainly on my radar for that. The next one, NVIDIA, very similar. You covered most of this, Dan. I have similar thoughts, but we are around that $100 key level, and I think that that's where a lot of people are kind of basing their risk on. So maybe some people who bought the dip last time after some of the Japanese stuff, caused the market to flush a month ago or a month and a half ago. I think that that was kind of a key pivotal point. So as we come up to it, I think that, the AI trade is unwinding in a lot of ways. And it doesn't mean that, NVIDIA doesn't have good fundamentals anymore. It doesn't mean that there's not good promise, but, you have large variance within these trends. And I think a lot of the hype is just kind of coming out of it. And then you can have a more reasonable trend established. So we'll see if that 100 level holds. You could potentially use that for a short-term bounce trade if it's acting like it doesn't want to break it. But if it actually, slices through that pretty easily, then I would have no doubts that we might test 90 or even lower. Probably somewhere in here is where you would find a little bit more support. But so NVIDIA, again, kind of a plan for two scenarios, either if it holds that 100 level for possible bounce, or if it, let's say it hits that 100 level, bounces to 105 or something like that, and still is acting heavy, I think we're going to go down. We're going to break that 100, and that could be a great trade to play on the downside. Next one, this is a little bit of a unique one, but it should probably come as no surprise with how I talk about some of the international stuff. But EWJ is an interesting one. This is the Japan index, and this is not something that I'm usually focused on. And if I were to play something like this with put options, if we get some volatility in Japan, then some of these are like longer term plays. So maybe a couple weeks out or a month out, you can play some of these trends with puts. If you think that trouble's coming over there, and you might have a retest of some of these areas on the flush. So 68 strikes. I know there's some significant open interest on the puts there. So it's just something that's on my radar in case we have some increased volatility out of Japan. And just to go back, to a month ago when we had these big flushes in the Japanese market, in the U.S. markets from like that. The carry trade unwinding, or basically just like the currency issues between Japan and the US. I think that initially that caused a big sell-off, and then the Japan central bank was like, okay, we're going to back off and we're not going to do this if it's going to basically crash the markets. And once the markets recovered, they're like, okay, let's try this again. And they're actually trying that. So I think if they start to push ahead, we could have some more significant moves in the currency markets, and that would translate into the Japanese market and also into the US markets as well. So that's something that is on watch for me with EWJ. And then XLF, this is also on watch. Stan, you and I actually were talking about this, I think yesterday or a couple of days ago, just how, financials have been kind of set for a correction, and a lot of these large bank names look fairly weak. And whether it's just because there's some stress in the financial markets with the currency stuff, or whether it's just because they were due for a correction after a big run up. Either way, they're acting weak, and they have been one of the best path of least resistance to the downside with some of these names like JP Morgan or Citibank. So the financial sector is on watch for me. If the market continues to stay heavy, I think that this will be a great way to play that. For me, it would be more with puts on some of these bank names. But, if the market starts to firm up, or if these start to firm up, then that would invalidate that thesis. But I have more of a bearish bias with financials until the market in general finds some more stability and we see things like the VIX stabilize and start to sell off again. Any comments on any of those, Stan?
No, you pretty much summarized it nicely. I think, like you said, we were discussing the situation late last week, and overall, it's a healthy thing when you have such a big run to come back, pull back, consolidate, and digest those gains. So just because we're looking to fade something, it doesn't mean that I'm bearish or that I think it's going to zero or I don't believe in it fundamentally. But perhaps I'm just looking at it and saying, this is a little bit too much too quick, and maybe we'll pull back a little bit and take advantage of that. So yeah, in line with your thoughts there on the financial aspect.
Yeah, and that's really what trading's all about. It's, finding moments in time where you have a trend in place, and whatever's causing that, as long as it has range, as long as you have a level you can risk off of, and you have like some kind of trend or reversal coming, then that's really those are the types of things that I'm looking for, and I know that those are the types of things that you're looking for most of the time as well. So great. Yeah, I think that we have a good amount of items for people to, really digest for the week ahead and to get some ideas, and then people can refine their own watch lists. And then the final reminder is that we are running this, I don't know if I'd call it a contest, but IU is looking to, sponsor a couple of tickets for Traders for a Cause. But, the whole goal with something like this is to find people who are, developing on their trading journey, and they would really benefit from connecting with the trading community, from going to something like Traders for a Cause, and to be able to meet people, to talk, to gather around a great cause. And the tickets are, they can be fairly expensive for people who are more developing traders. So we are looking to help some people along to be able to participate in that. So if someone's kind of like on the fence of whether or not they can attend, if they can get their own airfare and their accommodations, then IU is looking to basically cover the ticket for a couple of people. And so we will select the people that we will pick for that in one of two ways, and that is leave a comment in here, basically describing your trading journey and what going to Traders for a Cause would really mean to you. And if you're not, comfortable leaving it in the comments, then you can email me directly at chris@investorsunderground.com, and feel free to share your story or what you're thinking there. But Traders for a Cause is really it's just a remarkable way to connect with people, to gather around great causes, and to really develop yourself and to meet people. Like Stan and I, we met at Traders for a Cause, and you form these relationships with people, and they're just so helpful, and they're great not only for trading but in life itself. So Stan, do you have any thoughts to add for people who are potentially going to attend Traders for a Cause, or people who are looking to share their story for IU to potentially help them along?
Yeah, I mean, absolutely, Chris. So for me, Traders for a Cause, I last year was my first attending year, and we can go into that conversation more when if the viewers want to, when we see you there. But ideally, Traders for a Cause, I think, is most valuable for that developing trader. It's most valuable for the person that is finding their way and trying to see what's next, right? It's I think if you're already too set in your stones, if you've been trading for 30, 40 years, it's a great networking event, and it's a great way to put yourself out there and just see what everyone else is doing. But for the developing trader, I think it's beyond valuable, because not only of the networking aspect, and you get to meet people, you get to share strategies, you get to share your journeys, etc. But more so, you learn how to behave as a professional trader, as you see the professional traders there, and knowing how to do that, right, what it takes. It's a great way to cut your learning curve substantially, and create those connections to where, when you need to bounce off an idea, when you are having a good day or when you are having a bad day, there's a support system out there that is not going to allow everything to fall apart, right? It holds it together, and it keeps pushing you forward. And I think Traders for a Cause is a great conference to establish that.
Absolutely agree. So yeah, guys, leave a comment, share your trading journey and what going to Traders for a Cause would mean to you. Leave that in the comments section. And then if you're not comfortable with that, you can also email me directly at chris@investorsunderground.com. And then over the next, week or two, we will select a couple of winners for that. So Stan, thank you for joining me. Thank you for sharing your thoughts. And I hope that everyone has a great week ahead.
Absolutely. Thank you, Chris. Have a good one.
Take care. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.